Hey guys, welcome back. Today we're going to talk about out-of-state rentals. Out-of-state rentals can be a great way for people in an expensive market like ours to start building some passive income. I first heard about out-of-state rentals on the Bigger Pockets podcast. Surprise, surprise. Most of the guests on the Bigger Pockets podcast have big portfolios and big systems. So I thought, okay, these guys can probably handle the risk of an out-of-state rentals. But as I thought about it more and more, I thought about how feasible this could be for myself on a smaller scale. And then I started weighing the option more seriously against renting in my own backyard here in Denver. One day after work, I was making dinner here at my house hack in Denver, and my roommate told me that his girlfriend just bought a house in Cincinnati. He said that it was a 3-bed, 1.5-bath house, and she paid only $115,000 for it. This place was beautiful. He showed me pictures. It was totally remodeled, modern. And what blew my mind even more was that her roommates were paying just about as much as he was paying at my house for a room there. At this point, a light bulb basically exploded in my head. You have a house that's about a third as much in the purchase price and a very similar rental rate. Fast forward about 6 months, and I was out in Cincinnati shopping homes and setting up meetings. A couple months ago, I bought my second property out there. It was a triplex that was about $45,000, and it rents for around $1,600 a month. With conservative numbers, accounting for vacancy, capital expenditures, repairs and maintenance, property management, this place runs at about a 30% ROI. So for those of you that are familiar, people get excited about a 1.5% rule. This is about a 3.5% rule. Unfortunately, these numbers are just flat out not possible here in Denver. So what's stopping people from investing in markets like Cincinnati? Well, for most people, it's the distance. Cincinnati is over 1,000 miles away. So I mean, what happens if a tenant ruins the house? How am I supposed to know what's going on over there? Well, the answer for me is that I don't want to know what's going on over there. I don't want to know my tenant's name. I don't want to know what silly thing that they just did or asked for. I don't have time for that. For me, one of the best things about out-of-state rentals is how unemotional and unattached I am to them. I view the distance between myself and my property as a positive. It forces me to delegate and to treat my portfolio like a business. Something that really helped me overcome my fear of out-of-state real estate investing was David Green's book, Long Distance Real Estate Investing. This book gives you tons of actionable steps. The best thing about these actionable steps is that they don't cost any money. Property managers, lenders, agents are happy to get on the phone with you and tell you about their market. For me, what sets apart the folks who have been talking about real estate for years and those who actually own cash-flowing rental properties is action. As I just said, a lot of these action steps are free and easy. But the big kicker is that nobody's going to force you to start learning about real estate for an hour a day. The landlord's not going to come knocking on your door and tell you to stop helping him pay his mortgage. My challenge to you is to take some action today. Go on my website, check out some book reviews, see what resonates with you, order a book. Go on the Bigger Pockets podcast, see what piques your interest, listen to an episode. Once you've read or listened to one of these, give me a call or shoot me a message. I love talking about this stuff. See you later.